Welcome to this deep dive. We're going to be unpacking IRS Form 1120S. You might be thinking tax form's exciting, but by the end of this, you'll feel way more comfortable tackling this form yourself or having a way more informed conversation with your tax pro at DeMore Tax Service, LLC. We're going to go line by line, focus on what really matters with real-world examples to make it all stick.
And it's not just about filling in the blanks, is it? We're also going to be exploring the why behind each line so you understand the bigger picture of your business's finances.
Exactly. Even seasoned business owners sometimes find Form 1120S a bit daunting. So let's break it down. First off, what exactly is this form and who needs to file it?
Form 1120S is the tax return for S corporations, or LLCs that are taxed as S corp. Key point here, it's separate from your personal tax return, the 1040.
So two separate filings, but they're definitely connected, right?
Absolutely. Think of it this way. The 1120S tells the IRS about your business's earnings, but it's on your personal 1040 that you report your individual share of those earnings.
Got it. So when is this all due? Asking for a friend who might be a little behind on their paperwork.
Well, if your business follows a calendar year, the deadline is March 15th. But there's often the possibility of an extension to September 16th. And of course, for any questions, you can always reach out to a qualified tax professional at DeMore Tax Service, LLC.
Extensions are a beautiful thing. And speaking of beautiful things, are there any options besides snail mailing this form?
You bet. You can file electronically through the IRS e-file system, use tax software or R. If you prefer that old school feel, you can still mail it in.
Options are always a plus. Okay, so let's say we're ready to tackle this form. What kind of information do we need to round up beforehand?
Before you even open that 1120S, you need a solid grasp of your business's financial records. We're talking incorporation date as election date, business activity code, your EIN, the number of shareholders. You'll also need all your financial statements like income statements and balance sheets.
Okay, this is where I start to feel a little overwhelmed. I'm guessing this is where good record-keeping habits become super important.
You hit the nail on the head. You'll also need details about your assets, profit and loss info, deductions, credits, stock ownership. It's a pretty comprehensive view of your business finances.
If anyone out there is feeling overwhelmed at this point, remember, you can always contact the amazing team at DeMore Tax Service, LLC for help navigating these complexities. They're just a click away at demoretaxservice.com journally.
Having an expert in your corner, like a qualified CPA or EA, can make a world of difference, especially when it comes to things like choosing the right accounting method.
Right, the accounting method. That's either cash or accrual, and it determines how you report income and expenses, right?
Exactly. Choosing the wrong method can have major implications come tax time, so it's worth really understanding the differences and which one aligns best with your business.
Okay, so we've gathered all this information. We figured out our accounting method, and now we're looking at this 5-page form. Deep breaths, everyone. Let's tackle it section by section. First up, page 1, which seems to be all about identifying information and profit loss.
You got it. Items A through I on that first page are all about painting a picture of your business for the IRS. Things like your incorporation date, S election date, business activity, code name address, EIN, total assets, even if this is your final return.
Final return, hopefully not for most of us. What makes these seemingly basic details so important?
They provide the IRS with a snapshot of your business, setting the stage for everything else on the form. They need to know who you are, what you do, and when you started.
So it's like each item tells part of the story, and together they build a complete picture.
Precisely. Think of it like a puzzle. Each piece is essential to understanding your S Corp's financial activities.
Okay, I love that analogy. We've covered the identifying information, but page 1 also deals with profit and loss, right? What about lines 1 through 6, which focus on income?
This is where the numbers come in. This section is all about calculating your gross receipts, accounting for any returns or allowances, figuring out your cost of goods sold, determining your gross profit, factoring in any net gain or loss from other sources, and finally arriving at your total income.
This is where it starts to feel real for a lot of us. Can you walk us through an example of how these figures are derived? I'm a visual learner, and I'm sure a lot of our listeners are too.
Sure. Let's say you own a bakery. Your gross receipts would be all the money you earn from selling those delicious cakes and cookies. But then maybe a customer wasn't happy with their order and returned a cake. That's where returns and allowances come in. You subtract those from your gross receipts. Then you need to figure out your cost of goods, sold, all the ingredients, packaging, and other costs directly related to baking those treats. Subtract that from your gross receipts, minus returns, and voila, you have your gross profit.
That makes perfect sense.
Yeah.
Now I'm craving a cookie. But we have more ground to cover. Let's talk about lines 7 through 21, which deal with deductions. Everyone loves a good deduction.
Deductions are key because they can potentially reduce your taxable income. This section covers a lot of common deductible expenses like compensation for officer salaries and wages repairs and maintenance, bad debts, rent taxes and licenses, interest payments, depreciation, advertising pension contributions, and employee benefit programs.
Wow, that's a lot of potential deductions.
Mhm.
I'm guessing some of these are easily overlooked. Are there any you find S Corp missing out on frequently?
Absolutely. One that often slips through the cracks is home office expenses. If you're running your S Corp from home, you might be able to deduct a portion of your rent, utilities, and other home-related costs. Another one that's sometimes missed is continuing education expenses related to your business. Those can add up.
It really pays to be in the know. And speaking of paying, before we move on to the next section, let's take a quick detour to remind everyone that if you're feeling lost or overwhelmed by any of this, DeMore Tax Service, LLC, is here to help. You can find them at demoretaxservice.com.
They're fantastic at providing personalized guidance and making sure you're claiming all the right deductions while staying compliant with the IRS. Okay, now let's wrap up this section with lines 22 through 24, which cover tax payments and penalties.
This is the part that can make your stomach drop a little, right? But it's obviously important to understand. So what do we need to know about reporting estimated tax payments, overpayment credits, and those dreaded penalties?
This section is all about making sure you've been paying your fair share throughout the year. You report any estimated tax payments you've already made, apply any credits for overpayments from previous years, and yes, account for any penalties if you haven't paid enough.
This just reinforces how crucial accurate record keeping is. It's like having a superpower when it comes to taxes.
Absolutely. Detailed records of your income, expenses, and tax payments not only make filling out Form 1120S smoother, but can also help you avoid penalties and be prepared in case of an audit. No one wants to deal with that.
Okay, we've covered the basics of the main form itself. But what about all those accompanying schedules? Those are what really make things confusing.
Don't worry, we'll break those down too. They may seem intimidating, but each one serves a specific purpose in giving the IRS a complete picture of your S Corp's financial activity.
All right, let's dive in. First up, we have Schedule B, Other Information. What's the deal with this one?
Schedule B is where you provide those extra details about your business that don't fit on the main form. Things like your accounting methods, specific business activities, and whether you've made certain types of payments that require additional forms.
So it's like a deeper dive into the inner workings of your business, right?
Exactly. And even though it might seem like a lot of simple yes/no questions, accuracy is key here. Be prepared to back up your answers with documentation if needed. Schedule B can sometimes be a bit of an audit trigger, so it's better to be safe than sorry.
No one wants a surprise visit from the IRS. Okay, next up we have Schedule K, Shareholders Share. What's the main takeaway for our listeners here?
Schedule K is all about summarizing each shareholder's portion of the S Corp's income deductions and credits. It really highlights the concept of pass-through taxation, where the S Corp's income is passed through to the shareholders to be reported on their personal tax returns.
So this schedule is essentially making that connection between the S Corp's tax liability and each shareholder's personal tax situation.
Right? That's it. It shows how each shareholder benefits from the profits or shares and the losses of the S Corp. It's all about transparency and making sure everyone's on the same page.
Got it. Now on Schedule L, the balance sheet. When does this one come into play?
Generally, you'll need to complete Schedule L if your S Corp had more than $250,000 in receipts or are total assets at the end of the tax year.
So not always required, but important to know the threshold. Can you remind us what a balance sheet represents and why the IRS wants this information for certain S Corp?
A balance sheet is essentially a snapshot of your business's assets, liabilities, and equity at a specific point in time. Think of it as a financial health checkup for your S Corp. For those that meet the requirements, the IRS uses this information to assess potential risks and ensure compliance.
It sounds like these schedules are all connected, working together to give a full picture of the S Corp's financial story.
Exactly. We've covered 3 so far, and we'll delve into the remaining 2 in just a bit. Now let's dive into those last 2 schedules. Next up is Schedule M1, the reconciliation of income loss per books with income loss per return.
Okay, that title alone sounds a little complicated. Can you break down what this reconciliation is all about?
Essentially, Schedule M1 helps clarify any differences between the income or loss shown on your financial statements, which are usually prepared using generally accepted accounting principles, and the income or loss reported on your tax return.
I'm curious why there would be discrepancies between those two. Wouldn't the numbers always be the same?
That's a great question. There are actually several reasons why those numbers might differ. For example, businesses might use different depreciation methods for their assets for financial reporting versus what's allowed for tax purposes. Or sometimes certain expenses, like those delicious meals and travel we talked about earlier, might be partially deductible for tax purposes but fully expensed on your regular books. Schedule M1 helps bridge that gap and explain those differences to the IRS.
So it's all about transparency and showing the IRS how you arrived at the numbers on your tax return. Any tips for navigating this schedule? It seems pretty nuanced.
One key thing to remember is the connection between Schedule M1 and Schedule K, which we talked about earlier. Line 8 of Schedule M1 should match up with line 18 of Schedule K. This connection helps ensure consistency and accuracy throughout your return.
It's like the difference puzzles, making sure everything aligns. It really highlights how interconnected these schedules are.
You got it. They all work together to tell the full story of your S Corp's finances. Now let's tackle the last one. Schedule M2, which analyzes the accumulated adjustments account, other adjustments account, and shareholders' undistributed taxable income previously taxed.
Whoa, that's a mouthful.
Oh.
I'm already feeling a little lost.
I know the name can be a bit intimidating, but think of Schedule M2 like this. It's essentially tracking the money trail within the S Corp. It calculates the business's remaining balance after accounting for income losses and any distributions made to shareholders.
So it's basically a financial check-in to see what's left in the pot after everything else is accounted for.
Exactly. And while it may seem complex at first glance, it's really about understanding how the money flows within the S Corp and how that impacts each shareholder.
Okay, I'm starting to get it, but I'm also realizing this stuff can get pretty complicated.
Yep.
Any advice for our listeners who might be feeling overwhelmed at this point?
Absolutely. If you're dealing with multiple years of retained earnings or have complex shareholder transactions, Schedule M2 can definitely get tricky. Don't hesitate to reach out to a tax professional for guidance. It's always better to have an expert in your corner to ensure you're handling things correctly.
Speaking of experts, I can't stress enough how valuable it can be to have a trusted tax advisor on your team, especially when it comes to navigating the complexities of S Corp taxation.
Couldn't agree more. They can help you avoid costly mistakes, maximize deductions, and ensure you're in compliance with all the latest tax laws.
And for anyone looking for top-notch tax guidance, I highly recommend checking out DeMore Tax Service LLC. Their team is incredibly knowledgeable and dedicated to helping businesses thrive. You can find them at demoretaxservice.com.
They're truly a fantastic resource. Now let's step back from the nitty-gritty of the forms for a moment and talk about the bigger picture. We've gone through a lot today, from the basics of Form 1120S to those detailed schedules.
It's been quite a journey, but I think what's really resonated with me is the importance of understanding the why behind all these numbers and line items. It's not just about filling in the blanks, it's about gaining a deeper understanding of your business's financial health and making informed decisions.
That's exactly right. Understanding the tax implications of your business decisions is essential for success.
For example, we talked about the impact of choosing the right accounting method, maximizing deductions, and proactively planning for estimated tax payments. Those are all strategic moves that can make a real difference to your bottom line.
Absolutely. It's all about being proactive and leveraging your knowledge of tax laws to make choices that benefit both your business and your shareholders.
Now, I want to touch on something we mentioned earlier, the human element of S Corp. We focused a lot on the technical aspects of taxes. But what about the relationships between the S Corp and its shareholders? How can business owners cultivate a positive and collaborative relationship, especially when it comes to taxes?
That's such an important point. Taxes can sometimes be a source of stress and confusion, so open communication, transparency, and a shared understanding of the S Corp's financial goals are crucial for building trust and a strong working relationship.
I couldn't agree more. Shareholders are more than just investors. They're partners in the S Corp's success. Keeping them informed about the tax situation, explaining how their individual tax liability is affected, and addressing any concerns they might have can go a long way in fostering a positive and productive dynamic.
It's all about treating shareholders as valued members of the team, involving them in the decision-making process, and making sure they feel heard and respected.
Well said. And if any of our listeners are looking for expert guidance on building those strong relationships and navigating the complexities of S Corp taxation, I highly recommend reaching out to the folks at DeMore Tax Service, LLC.
They're incredible at providing personalized support, answering all your questions, and helping you make informed decisions that benefit both your business and your shareholders. You can find them at demoretaxservice.com.
I can't recommend them enough. Now, before we wrap up this deep dive, I'm curious, are there any other aspects of S Corp taxation that we haven't touched on that you think our listeners should be aware of?
That's a great question. One thing that often comes up is the issue of reasonable compensation for shareholder employees. It's a bit of a balancing act as the IRS wants to ensure that S Corps aren't disguising salary as distributions to avoid payroll taxes.
Hmm. It's interesting. So how do you determine what's considered reasonable in the eyes of the IRS?
It depends on a variety of factors, such as the shareholder employee's experience the industry and the specific duties performed within the S Corp. It can get a bit complex, so it's always best to consult with a tax professional to make sure you're on solid ground.
That makes sense. It seems like having a knowledgeable tax advisor is crucial for navigating these tricky areas and making sure you're in compliance.
Absolutely. They can help you avoid potential pitfalls and make informed decisions that protect both your business and your personal finances.
Well, I think we've covered a lot of ground today, from the detailed line items on Form 1120S to the broader strategic considerations for S Corp owners and shareholders.
It's been quite a deep dive. Hopefully, our listeners are feeling more empowered to tackle their S Corp taxes and make smart decisions for their businesses.
I hope so too. And remember, if you're ever feeling lost or confused, don't hesitate to seek help from a qualified tax professional like the fantastic team at DeMore Tax Service LLC. They're experts at making taxes less taxing. You brought up a great point about reasonable compensation. It seems like there's a lot of nuance there and probably a lot of room for error if you're not careful.
Exactly. The IRS is always on the lookout for situations where an S Corp might be trying to classify salary as distributions to lower their payroll tax liability.
So it's really important to strike that balance and make sure you're paying yourself a fair wage while also staying on the right side of the IRS.
Precisely. And that's where having a knowledgeable tax professional can be invaluable. They can help you analyze your specific situation, determine what a reasonable salary would be for your role in industry, and document everything properly to avoid any red flags.
It sounds like documentation is key throughout this whole process. From
Yeah.
gathering your initial financial records to substantiating your deductions and even demonstrating reasonable compensation, it's all about having those records in order.
Couldn't agree more. Good record keeping is the foundation of sound tax practices, and it can save you a lot of headaches down the road.
Well, I think this deep dive has been incredibly eye-opening. We've covered so much ground from the specific line items on Form 1120S to the broader strategies and considerations for S Corp owners and shareholders.
I feel like we've really demystified this form and
Yeah,
hopefully empowered our listeners to approach their S Corp taxes with more confidence and understanding.
absolutely. And I think the key takeaway for me is that while this stuff can seem complicated, it's definitely manageable with the right knowledge and resources.
And speaking of resources, we can't forget to mention the amazing team at DeMore Tax Service LLC. They're experts at making taxes less taxing and can provide personalized guidance every step of the way.
I second that. If anyone out there is feeling overwhelmed or just wants some expert support, definitely check them out at demoretaxservice.com.
They're truly fantastic. Now, before we wrap things up, any final words of wisdom for our listeners as they embark on their S Corp tax journey?
I would just echo what we've been saying throughout this episode. Knowledge is power. The more you understand about S Corp taxation, the better equipped you'll be to make informed decisions for your business and your personal finances.
Well said. Stay informed, stay organized, and don't be afraid to ask for help when you need it. There are experts out there who can guide you through the complexities and help you succeed.
Couldn't have said it better myself. Thank you so much for joining us on this deep dive into the world of Form 1120SS. We hope you found it valuable and insightful.
It's been a pleasure sharing our knowledge with you.
And thank you for listening to Let's Talk Taxes podcast. We'll see you next time for another deep dive.